The gold market is hiding something big. For months, the gold market has been doing something that many investors hate. Nothing, no dramatic rallies, no historic crashes, no headlines screaming that everything has changed, just a market that seems stuck. And that's exactly why some experienced investors are paying attention. Because history shows that the biggest opportunities often appear when everybody else is bored. Think about it. When a market is making new highs every week, everyone notices. When prices are collapsing, everyone notices. But when prices move sideways for months, most people stop paying attention. And that's when interesting things can happen. Today we're going to explore why gold's current behavior may be more important than it appears, what history tells us about long periods of consolidation, and why the next major move could be much larger than most investors expect. Chapter 1. Why sideways markets aren't boring. Most people believe markets should always be moving. Up, down, somewhere. But markets don't work that way. Financial markets spend a surprising amount of time doing almost nothing. In fact, some of the strongest trends in history began after long periods where prices appeared completely stuck. Imagine two armies pulling on opposite ends of a rope. Neither side is winning, neither side is losing. The battle continues day after day. That's what happens during consolidation. Buyers believe prices should be higher. Sellers believe prices should be lower. As they fight for control, price gets trapped between support and resistance. The longer this process continues, the more important the eventual outcome becomes. Chapter 2. The spring effect. Imagine compressing a spring. At first, it doesn't move. The pressure builds silently. Nothing exciting appears to be happening, but energy is being stored. Eventually, the spring releases, and all that energy explodes outward. Markets behave in a remarkably similar way. When investors lose interest because prices aren't moving, positions continue building behind the scenes. Institutions accumulate. Traders place bets. Expectations grow. Pressure builds. Then eventually something changes. A breakout occurs. And suddenly everyone wants to know what happened. The truth is that the move often started long before anyone noticed. Chapter 3. What gold is doing right now. Gold has spent months moving inside a relatively narrow range. Every rally has faced resistance. Every decline has attracted buyers. The result is a market that keeps returning to familiar territory. This tells us something important. Neither buyers nor sellers currently have complete control. Instead, both sides continue testing each other's strength. Think of it like a chess match. Each move creates a response. Neither player wants to make a mistake. Eventually, however, someone gains an advantage. And when that happens, the game changes quickly. That's what investors are watching for right now. Not necessarily today's price, but signs that one side is finally taking control. Chapter 4. History's most important lesson. One of the biggest mistakes investors make is assuming that quiet markets stay quiet forever. History suggests otherwise. Throughout financial history, long periods of consolidation have often been followed by significant trends. Sometimes those trends moved upward. Sometimes they moved downward. But the important point is that periods of compression rarely last forever. Eventually, the market chooses a direction. And once that direction becomes clear, momentum often accelerates. The challenge is that most people only notice after the move is already underway. That's why experienced investors spend so much time studying market structure. They're trying to identify conditions before the crowd reacts, not after. Chapter 5. The levels that matter. Every market has important zones, areas where buyers consistently appear, areas where sellers repeatedly defend their positions. Gold is no different. Over recent months, several key regions have become battlegrounds. Whenever price approaches support, buying activity increases. Whenever price pushes toward resistance, selling pressure emerges. These repeated reactions create a framework that investors can monitor, because eventually one side stops winning. And that's often when major trends begin. The market doesn't need to make a huge move tomorrow. What matters is whether these levels continue holding or whether they finally break. Chapter 6. If gold breaks higher. Let's consider the bullish case. Suppose gold finally pushes above its current range and stays there. What happens next? A breakout from a lengthy consolidation often attracts attention from multiple groups at the same time. Trend-following traders begin buying. Institutional investors increase exposure. Momentum traders jump in. Retail investors return. As demand increases, prices can accelerate rapidly. This creates a self-reinforcing cycle. Higher prices attract more buyers. More buyers push prices even higher. And that process can continue far longer than many people expect. That's why major breakouts are watched so closely. Not because the breakout itself is important, but because of what it can trigger afterward. Chapter 7. The other possibility. Of course, markets don't always move higher. If support levels fail, a completely different scenario becomes possible. A breakdown could trigger fear. Short-term traders might rush for the exits. Selling pressure could increase. Prices could fall sharply before finding a new balance. However, there's an interesting detail. Recent attempts to push gold significantly lower have struggled. Buyers have repeatedly stepped in. That doesn't guarantee future strength, but it does suggest that demand remains present beneath the surface. And that's one reason why many investors continue watching the market closely. Conclusion. The biggest lesson isn't predicting exactly where gold will go next. Nobody knows that with certainty. The real lesson is understanding how markets behave. Major trends often begin when nobody is paying attention. Big opportunities frequently emerge during periods that feel boring. And right now, gold appears to be in one of those periods. A market caught between powerful forces, a market building pressure, a market waiting for direction. The question isn't whether gold is moving today. The question is what happens when this period of waiting finally ends. Because when it does, the next move could be far more significant than most people realize. So what do you think? Is gold preparing for a major breakout, or is another shakeout still ahead? Let us know in the comments below.